Stephen Miran, one of President Donald Trump's top economic advisors, was narrowly confirmed by the Senate to serve on the Federal Reserve's Board of Governors, just hours before the Fed's two-day monetary policy meeting began. The Senate voted 48 to 47 to approve Miran's appointment, with Sen. Lisa Murkowski of Alaska as the lone Republican to oppose his confirmation. Miran will join 11 other officials in voting on interest rate decisions. He was nominated to complete the term of former Fed Governor Adriana Kugler, which expires in January 2026. Miran has said he will not resign from his influential White House post while serving on the Fed's board, opting instead to take unpaid leave. That decision has sparked controversy, as the Fed has long maintained its independence from partisan politics. For the first time in its 111-year history, one of the board's members will simultaneously hold ties to the executive branch. During his Senate confirmation hearing, Miran defended the arrangement, stating that an attorney had advised him that it was legal. He pledged to carry out his duties as a Fed governor on his own. "I'm very independently minded, as shown by my willingness to stray from consensus and have out-of-consensus views, and I believe that I will continue to be as independent in my thinking process, if confirmed," Miran told senators. Miran's confirmation comes at a pivotal moment. The U.S. labor market is weakening as Trump's widespread tariffs begin to push up prices, putting pressure on both sides of the Fed's dual mandate, stable prices and full employment. At the same time, the Trump administration has escalated its campaign against the central bank, blasting officials for not lowering interest rates. The White House has aimed personal insults at Fed Chair Jerome Powell and attempted to fire Governor Lisa Cook, an unprecedented move against a sitting policymaker. Miran told senators that he believes the Fed's independence is critical to the well-functioning of the economy and financial markets. He added that he will abide by federal law and ethics rules in his new role. Democrats remain skeptical of his ability to separate himself from Trump, especially given his decision to take leave rather than resign from the White House. Some lawmakers highlighted a Manhattan Institute paper Miran co-authored last year, criticizing the revolving door between the White House and the Fed, calling his nomination ironic. In response, Miran said his paper had laid out proposals to reform the central bank and stressed that it's important that we have democratic oversight.